Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday the 9th of April in London. I'm Stephen Carroll. Coming up today, Trump's higher rate tariffs take effect as China gets hit with a punitive 104% levy. Markets resume their sell-off as bonds take the meltdown baton from stocks in a worrying sign for central banks. Plus, Pharma prepares to swallow a bitter pill. Trump teases further major tariffs on drug makers. Let's start with a roundup of our top stories. Donald Trump's so-called reciprocal tariffs are now in effect as the US president moves forward with his effort to reorder global trade. China faces a 104% levy, while imports from the EU will be taxed at 20%. In total, around 60 countries that run trade surpluses with the US are now subject to higher import charges. This follows the introduction of a 10% baseline tariff on most American trading partners, which took effect on Saturday. Speaking at a fundraiser just before the new charges came into force, Trump was in a jubilant mood.
We're making a fortune with tariffs, $2 billion a day. Do you believe it? I was told $2 billion a day. You know, I get hit by the press about tariffs. We're making $2 billion. This isn't 35 million, that's peanuts. $2 billion a day. And then they say, gee, they don't know. You know, this is only the enemy can be talking this way. In addition, we have a lot of countries coming to see us. They want to make a deal.
Trump says that teams from Japan and South Korea were en route to the US to hammer out agreements as nations look to secure reductions to the higher tariff rates. The 104% charge on most Chinese goods has drawn a strong response from Beijing. Premier Li Qiang says the country has ample policy tools to fully offset any negative external shocks. That's as the People's Bank of China weakened the yuan's daily reference rate for a fifth straight session in a carefully orchestrated move to blunt some of the economic impact of the trade war without destabilising financial markets. Senior fellow of the Taihe Institute, Einar Tangen, says the country is positioning itself to wait for US voters to turn on Trump.
Let's be frank here. These tariffs are not being paid by China. They're being paid by U.S. consumers. And in 2 months from now, there's going to be war cries on the street. A lot of people who elected Donald Trump because they thought he could control prices will be calling for his head.
Einar Tangen speaking there. The triple-digit charge is made up of a previous 20% levy tied to fentanyl trafficking, a 34% reciprocal tariff derived from a calculation based on the bilateral trade balance, and an additional 50% duty Trump announced after Beijing said it would respond by taxing US exports to China. With the higher tariff rates now in effect, the long end of the US Treasury market is facing renewed pressure as investors scramble to raise cash. The 30-year Treasury yield jumped as much as 20 basis points more today in what Bank of America's Mark Cabana called a fire sale. The sharp move is raising fears of a repeat of 2020's unwinding of the basis trade, a highly leveraged hedge fund wager. Then the Federal Reserve had to intervene to stabilise the market. Well, markets are tumbling in a broad sell-off after the tariff deadline. The dollar fell along with equity index futures for Europe and the US, and oil hit a fresh 4-year low as investors are gripped by a crisis of confidence in US exceptionalism. Earlier, former US Treasury Secretary Larry Summers warned that the US is now likely headed toward a recession.
We'll see an extra 2 million people be unemployed. We'll see losses in household income that are $5,000 a family or more. We're very likely, in the context of a recession, to see markets reach levels significantly below their current levels.
Summers added he didn't yet see a bottom for the market. The losses come after a day of relatively calm trading was shattered by the White House saying it would double down on its tariff approach. Bloomberg has learned the White House's top economic team argued over plans to impose even bigger tariffs. Trade advisor Peter Navarro was among the US administration's more hawkish members who pushed for a flat 25% levy on all countries, whereas privately Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick tried to moderate the plans, warning of a stock market reaction. White House spokesperson Caroline Leavitt was asked about public comments Elon Musk made, calling Navarro, quote, dumber than a sack of bricks.
Look, these are obviously two individuals who have very different views on trade and on tariffs. Boys will be boys, and we will let their public sparring continue. And you guys should all be very grateful that we have the most transparent administration in history. And I think it also speaks to the president's willingness to hear from all sides, that he has people at the highest levels of this government in this White House who have very diverse opinions on very diverse issues.
Leavitt added everyone who is involved in making the tariff plan will be involved in bilateral negotiations going forward. American consumers are attempting to get ahead of the tariffs, stocking up on imported products. Bloomberg's Ewan Potts has more.
From Italian olive oil to bigger purchases like cars and smartphones, President Trump's tariffs are pushing many US consumers to try and get ahead of any price rises. Staff at Apple stores reported a bumper weekend last week, and data from Bloomberg's second measure, which tracks credit and debit card purchases, showed electronics retailer Best Buy had its best monthly performance since 2021. Car showrooms also very busy. One Californian seller of outdoor gear is even running a special promotion with the activation code Tariffs Suck. In London, I'm Ewan Potts, Bloomberg Radio.
President Trump said his long-promised tariffs on pharmaceutical drugs will be coming soon. The move is just the latest signal that he plans to press ahead with more sectoral tariffs despite market fallout from his global levies. Trump has long bemoaned a lack of domestic pharmaceutical production and has repeatedly promised tariffs to bring more capacity into the country. Here he was speaking yesterday.
We're going to tariff our pharmaceuticals because we're the big market. The advantage we have over everybody is that we're the big market. So we're going to be announcing very shortly a major tariff on pharmaceuticals.
In addition to pharmaceutical drugs, Trump's administration has separately pledged additional sectoral levies, including on lumber and semiconductor chips, though timing and details are unclear. Those are your top stories. On the markets, the 10-year Treasury yield 14 basis points higher at 4.43%. The 30-year yield now 16 basis points higher at 4.93%. In Asian equity markets, the MSCI Asia Pacific Index is down 2.5%. The Nikkei in Tokyo down by 4.6%. Eurostoxx 50 futures are plummeting as well, down 4.4%. FTSE 100 futures are down by 3.4%. On Wall Street, S&P E-minis are down by 2.3% as well. And we have just news as well that Japan's Ministry of Finance and the Bank of Japan with financial regulators are going to hold a meeting this afternoon, their time as well. So later this morning in London, as the 40-year yield has risen 32 basis points to the highest since its debut in 2007 as well. We've had the yen trimming its strengthening after we've had news of that upcoming meeting between the Ministry of Finance and regulators as well. Well, in a moment, we'll bring you more on the tariffs as Donald Trump's new levies come into force, plus talk you through the market reaction. But while investors are giving their verdict on Trump's trade war, David M. Drucker has been writing for Bloomberg Opinion about how American voters are considering the tariffs. He points to a poll conducted last week in the run-up to the big tariff announcement showing a majority of Republican voters approve of the president's handling of jobs, trade and the economy. Only on inflation was his support softer. And Dave Drucker writes that you should expect those voters to retain a substantial amount of trust in Trump's management of the economy. Now, he says that's partly down to how Trump is selling these measures as restoring fairness to the American economy, a message that resonates in places where the outperformance of the US hasn't been felt, like in key swing states. The challenge, though, David M. Drucker writes, is for Trump that the tariffs have never worked, including in the 1800s when they were more common, and that's contrary to the claims the president made while unveiling the new policy. It's among the reasons most economists are not just sharply critical, but downright incredulous. But David writes that for now, Trump has the political leeway to prove his critics and history wrong. But the risk is that if his efforts to transform the global economy take too long or never materialise, how will that go down with his supporters? It's a great piece. You can read it at bloomberg.com/opinion. Well, let's bring you the latest on the tariffs story as those higher rates come into effect for around 60 of America's trading partners, including 20% on the European Union. China now facing a 104% levy on its exports to the United States. Our trade czar Brendan Murray joins us now for more. Brendan, let's start with China then. What does a 104% tariff do to that trading relationship?
It will slowly disintegrate it, if not do more damage quickly. Basically, if you're an importer in the U.S. right now and you have $100,000 worth of Chinese products that are on the ocean headed toward the U.S., you're now going to have to pay more than $200,000 for those if you factor in the tariff. So the trading relationship will be under an enormous amount of stress. A lot of trade will be diverted to other countries. But in the short run, many companies would just basically cancel their orders and wait to see if this is a long-term issue that's going to require different suppliers from different countries, or it's just a short-term issue that's going to be resolved in a month or two through talks. But the bottom line is it just creates an enormous amount of uncertainty for, one of the biggest trading relationships in the world.
Brendan, China this time yesterday was promising to fight to the end in this trade war, but can China retaliate in a meaningful way against the US? And do they look likely to?
Well, they haven't so far, which is a bit surprising. They did very quickly the previous two times that Trump imposed tariffs of 10% each. And so they could be playing the game here where they announce something right before the U.S. market opens for maximum impact. But it's definitely curious that they haven't announced anything so far. But surely that's only a matter of time. This will not drive China to the negotiating table. They are notoriously unwilling to negotiate under duress. And so they're going to have to diffuse the situation here before they'll be, as they would say, bullied to the bargaining table.
Of course, it's not just China being affected here. Dozens of other countries are seeing higher tariffs come into force today. I mean, how significant is this in the escalation of tariffs that we've seen and the reordering of the global trade relationships that Donald Trump is trying to orchestrate?
Yeah, exactly. So every import into the U.S. from the European Union is now 20% more expensive, given the rate that the Trump administration has applied to the EU and 10% for the UK. So the global trading system has taken many decades to form these trading relationships through trade agreements, through certain treaties between countries. And we're watching them, all of this kind of unravel before our eyes in a matter of days or weeks.
What hopes are there for negotiations now? We see some countries being singled out by Donald Trump as having envoys on the way for talks.
So Japan, Korea, and India seem to be the first in line to start the negotiations. The Trump administration thinks that these kinds of talks can be held on short order in a number of weeks or maybe a month or two. But the experience and history has shown that trade relationships are incredibly complex. They're usually written on thousands and thousands of pages of documents with legalese that are really hard to decipher. So once you start getting down to the nitty-gritty of it, that's where the real hard work begins. So it's easy to get parties to the negotiating table. It's much more difficult to actually pull this off and reach an agreement where both sides are happy.
Okay, Brendan Murray, our trade czar, thank you very much. We've seen further dramatic moves on markets as these tariffs come into force. Treasuries selling off further, stocks also dropping in Asia. Let's bring in our markets live strategist Mark Cranfield for more. Mark, first of all, let's start with Treasuries yield spiking again today. Is this a fire sale, as Mark Cabana, Bank of America, is calling it?
Yeah, or a buyer's strike is what Lombard Odier have also described it as. And one of the issues, of course, is that the US Treasury has to continue with its auctions, even though we've got these huge dislocations in markets. They had a 3-year auction last night, didn't go that well. We have a 10-year today and a 30-year the day after. These are going to be a very big test for the market, particularly as people are watching what the international participation is. Everyone knows that Japan and China are two of the largest holders of US Treasuries, and if they decide that they don't want to show up at an auction, particularly a long-dated sale, it's going to be very tricky, and we'll put everything back onto the Wall Street players. They'll have to take the bulk of the bonds if that's the case. So it's a very dicey situation. It's a bit like having a bunch of landmines in front of you. Nobody wants to step on them. And that's partly the reason why we're having this huge volatility today. Very unusual in Asia to see Treasury yields rising so quickly. But clearly, people are thinking that there is a higher risk that Treasury auctions do not go as smoothly as usual.
We're also seeing other authorities elsewhere in the world reacting to this. Japan holding a meeting, the central bank and the finance ministry and regulators meeting later on today after a big jump in their bond yields. What should we be thinking about looking ahead to that meeting?
It's all about disorderly markets. No central bank likes to think that any part of their financial market is at risk of becoming disorderly. Some of the moves in Japanese bonds today are teetering on that, very unnerving if you're someone in charge of looking after those kind of markets, and also the equity market as well in Japan has taken a fearful bashing as well this week as well. So they've got plenty of reason for coming together, which they typically will do after high volatility. It won't just be in Japan. Other countries will be doing the same thing. They'll want to make sure that all their mechanisms are in place, all the structures are secure, they have the liquidity they need should they need to quickly come into the market to reassure everybody that they're still in control and there's nothing to worry about. It's probably, you would think, it might sound a little bit overkill, the fact that they've publicized the fact that they're having this meeting, but you can expect other countries will be doing exactly the same thing because volatility is extreme across asset classes.
We've been watching the PBOC's move on the yuan as well, weakening the fix again. I mean, how much pressure is on the yuan given that China is at the focal point of these trade tariffs?
The central bank in China is managing it very carefully. The market is trying to push them further because you have this situation of an offshore yuan and an onshore. And the offshore, in theory, has no limits to it. It can move as far as any other currency. And typically that's what you're seeing is if people want to speculate against the risk of a much weaker yuan, they tend to use the offshore currency. We saw overnight there was a huge spread between the offshore and the onshore. That's narrowed a bit during the day today. It will probably widen again tonight as we get into London and New York trading. The central bank on the other side is very gradually lifting the daily fixing rate. They're showing the rest of the world very clearly that they're in control, but they're also guiding the currency to lower ground as well. But they're doing it at their own speed. There's probably quite a way to go considering that they're about to be hit with a lot of new tariffs from the United States.
Well, as we're thinking about the European Open in a couple of hours' time, Mark, what should we be watching out for?
Everything. It's been a complete mess across Asian markets. Equities are down across the board. If you look at what the European futures are suggesting, they're looking at a very big decline, probably a 4% decline at the opening for European markets. Although German bonds futures are doing pretty well, they're actually quite solid. There is no sell-off in German bond futures, and completely unlike what we're seeing in Australia, Treasuries and JGB. So that's one good point. And the euro currency is having a pretty good start to the day as well. But equity markets, there seems to be nowhere to hide for them. So do expect a pretty weak opening in European equities.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.